Looking at the Markets with David Modell. Welcome to Looking at the Markets with David Modell. Today we have a special guest. His name is Mr. Don Durrett. He is an author, he is an investor, he owns an amazing website we're going to talk about. He does many things. You can see right behind him, there it is. That's his book, How to Invest in Gold and Silver, a complete guide with focus on mining stocks. He is a contributing author to seekingalpha.com, and his website is goldstockdata.com. And there's so much on this website. Even if you just look at the free resources that are right there, it's incredible. And then you can get a premium subscription as well. So, Mr. Durrett, thank you so much for joining me today on Looking at the Markets.
Thanks for having me on, David.
Yeah, I really appreciate your time today. There's so much to talk about in the precious metals and mining space. But first, I wanted to learn a little bit more about you. How did you first get into finance and investing, and why did you choose to focus on the metals and mining sectors?
Well, this actually goes back to the 80s. I wasn't a big fan of Ronald Reagan's Keynesian economics, and I was kind of in the George Bush school where he called it voodoo economics. I remember back in the 80s, I used to talk to my dad about it and say, this isn't going to work. You just can't. You just keep adding debt. Eventually that catches up with you. So then I read a book in 1989 that forecasted kind of the end of the United States era, if you will. So I was kind of ahead of the curve, but the book resonated with me, so I started investing in gold mutual funds in the early 1990s and became a big gold bug.
Sure. And it's a fascinating area to get into. It's a very exciting niche right now. I wanted to ask what miners and junior miners are piquing your interest right now if you're looking at a long position.
Well, my portfolio is pretty much completed because I've been investing for a long time, and I've been buying a lot of stocks as the prices have been dropping. So I don't have a long personal list of buy stocks. I always have one or two in case one of my stocks gets taken out. However, in my newsletter and on the website, I have a top 25. And my top 25 list are the best risk-reward stocks that have at least 5-bagger potential. So either high upside. My philosophy is that if you're going to invest in gold mining stocks and silver mining stocks, you might as well go after big returns. Otherwise, why are you in this space? I also have other lists in my newsletter. I have 5 to 20 baggers, 2 to 3 baggers, dividend stocks, and exploration stocks. So I have a whole gamut list. But instead of listing individual stocks this time, I'll just kind of leave it at that.
Sure. And, of course, nothing we say in this video is a recommendation to buy or sell anything. We are not providing any financial advisement. Please do your own due diligence and do your own research, make your own decisions, because it's still an amazing time to get in, though. I mean, the U.S. dollar, for example, I like to use UUP, which is the U.S. dollar ETF. I like to trade that one. It's down this year in 2017. I don't know. I look at these things as an opportunity. Is this a value play or is it a value trap?
Well, it's a pretty important inflection point, that's for sure. I mean, if you look at the dollar index, I actually do the DXY USD, and it's down right at its 2-year kind of where it started up. So it's at a really important support level at 93. And it's trading below 93 right now. And, is it a value play or is it a trap? I think right now you have to be neutral because we don't know which way it's going to go. I think that the 200-week moving average is at 92.30. I think that's a real important point. I think if it gets under 92.30, it'll probably drop down pretty quickly down to 91.50. And that might be your opportunity to play the short side. But now there's a lot of smart people that think it's going to go higher. I've heard people talk about 110, 120 on the DXY, which would be quite a move upward. I personally don't see that coming because I just think what I'm seeing in the economy is weakness, overall weakness. The only strength I'm really seeing is the stock market. per se. I mean, there's a few other ones. The PMIs haven't rolled over, of course. But by and large, I personally see weakness, so I'm thinking the dollar might break down here. But I have my fingers crossed. I'm not sure which way it's going to go. It's going to have a huge impact on the miners. So the miners have been trapped. We had a low in 2015 of 10.45 in the dollar. I mean in gold. And in 2016 and in 2017, we've seen this up and down action. It'll go up. Basically, I call it the rinse and repeat. It'll make a run and then it'll go back down. It'll make a run and go back down. It's been doing this for 2 years, and I think it's kind of indicative of a breakout more than a breakdown. I think that 10.45 is probably going to hold, and I think at some point we're going to break out. And so, yeah, I think this is an opportunity to get into the miners. And once it breaks above 1309, I've been saying this. Once it breaks above 1309, I think you might not go back below that. I think that might be when it really starts going. And then once it gets above 1450, really it's going to be there's a good chance that these stocks are no longer going to be cheap. They're not. A lot of the strong producers right now are not cheap. They were last January, but not so much now. Not 2017 January, but 2016 January. They were incredibly cheap. We might not see those cheap prices again. And if we make a run, once we get over 1309, we make a run to 1400, then you're not going to get these opportunities again. So right now, it's a tough call. I mean, a lot of people, are we going to go lower? Because we haven't broken out. I call it neutral territory. Until we get above 1309, I think you have to be on the defensive to a certain extent. You just can't, buy and expect it to go higher. It could go lower. As a matter of fact, we have this huge wedge that's building right now in the gold. And the wedge, it started in 2011 when we hit our top in August 2011. If you look at the chart from that 2011 going down, creating this triangle, the triangle is completing right now. So the triangle it's kind of a double-edged sword. It's completing, and it's probably going to complete in the next 1 to 6 months. And it's either going to complete to the upside or the downside. And it doesn't seem to matter. Since it's such a big triangle, I mean, this goes all the way back to 2011. Whichever way it decides to break is probably going to be pretty significant. So if you're buying stocks right now, it breaks the downside, you're probably going to catch a falling knife. And the other side of the coin, if it breaks to the upside, it's a perfect time to buy, but it's hard to call.
Sure. Now, I wanted to get back to U.S. equities. It is. It seems a little toppy. We're getting new all-time highs in the spiders, in the Qs, in the diamonds on a regular basis lately. Just this year, and since the election, it's either gone sideways or up. It's stair-stepping. Should investors be hedging against what might be considered an overdue market crash this year? What do you think?
Well, I'm probably not the right person to ask that question because I'm going to talk my book, of course. I've been calling. I thought we were going to have a crash in 2015 and 2016, and so here we are in 2017, kind of expecting it again because earnings have been flat since 2012. If you look at them, we really haven't had a strong recovery, and this recovery's been going on since 2009. I mean, at some point it's going to end. And also, if you look at the debt situation, I mean, all we've done is accumulate debt, add leverage. It's a precarious situation. I mean, you have a lot of people that are nervous, and rightfully so. So I think hedging, gold and silver makes sense, although it has to feel right. I mean, a lot of people just don't feel comfortable with gold and silver. I'm in a niche. I've kind of, I really like the physical, but from the investment side of things, I like the miners, which are really risky. People aren't comfortable going in that, so it's definitely a risk area. I mean, it's a niche area, but in some respects, it's kind of a once in a lifetime deal. I mean, if things do break down in the stock market and the economy rolls over, I mean, we haven't had mass layoffs since 2009, so everybody doesn't, we don't know how that feels anymore. It feels like we're never going to get them again. I heard Janet Yellen saying in her lifetime we might not get another crash. That's kind of a tough call. I think we will. And so if we do get another crash, these miners have unbelievable leverage. And so a lot of people like to chase the trend. And so if it does happen, you're going to see a lot of people go into the miners, and they're going to move unbelievably quickly. I mean, you're going to have stocks that go up 100% in 1 month, and that's what's going to happen if we do get this breakout, breakdown in the stock market, breakout in the miner stocks. So it's you have to decide if you want to get involved in that area or not.
Yeah.
It's not for everybody.
Right. Now, I wanted to talk about goldstockdata.com. You do have a couple websites. You have dondurrett.com, and I'm looking at that right now, and that might be a little bit less finance-oriented, but still a worthwhile, definitely worthwhile to read and look at. But today I wanted to talk about goldstockdata.com. There's so much on here. I mean, the database of information, if you want to look at miners in the precious metals sector, can you tell us a little bit about this website and what people will see when they visit it?
Yeah, sure. I got into mining. I wanted to invest in silver miners, and there was no ETFs, there was no mutual funds, so I had to start buying individual stocks. So this is in 2004, and I went in and I tried to find some books on how to invest in, juniors and silver miner stocks, and I couldn't find a good book. I couldn't find really anything was decent. So I wrote my own. Well, I couldn't write my own because I didn't know anything. This was back in 2004. So then, 2010, I think I wrote it in 2009. The book came out. First version came out in 2010. So after I learned how to do this, I said, I'm going to write a book because there isn't anything out there. And I wrote it kind of for people like me that wanted to do this, wanted to have a source material. So after I wrote the book, I created the website in 2010. And so, I created the website. The book came out in 2010. The website came out in 2012. So 5 years, this website has been expanding over 5 years. So now we're up to 725 gold and silver mining stocks that trade in North America, Australia, and London. The only exchange I don't cover is Germany. So the database is fairly large. Now, I created this database for people like me that wanted really good information. So the database is very expansive. The search engine is pretty robust, if you will. You can search for anything. You can narrow your focus down by all the factors you can think of, grade, cash flow, etc.
Right.
I'm not going to answer the phone, so the database is kind of the heart of the website, but I also analyze each stock. So you get the data and analysis combined. And then you also get the newsletter that comes out once a month, plus the forum. So it creates a lot of value for people that are involved. And these are for people that are, avid kind of gold and silver mining stock people. So, I mean, if you have 1 or 2 gold and silver mining stocks, it's not the website for you. But if you have 3 or more, and you want to buy some, then yeah, it's pretty nice.
Sure, it's such a robust website, even the free version of it. But if you do choose to become a member, I'm seeing here that with membership, you get to search all 748 stocks instead of just a sampling of them. You get to take advantage of the preset searches, save and load up your own searches, including shortlisted stocks. You can save and reload your column views. You can auto-load default views, automatic searches, so much here. You've got charts on here, and you got the best and worst performing stocks on multiple mining stocks on multiple time frames. It's really amazing. So I suggest people check that out, as well as the book, available on Amazon.com, How to Invest in Gold and Silver. And links to all of these will be in the description of this video, so people should certainly take advantage of that. And we'll talk more about that. But I'm just curious right now, and again, this is not investment advice, but do you have any tips that you can provide for valuing mining stocks in the precious metals sector? How do you value them?
Well, this is actually free to the public. On the website, there's something on the main menu called Mining 101, which is a chapter from my book. It's about 20 pages, and it actually goes through all the steps that I do to value a company. Also, my Seeking Alpha articles, I always list the three Ps and some other additional data points of how to value the companies. So I'm always kind of teaching people, if you will, how to do this. But so that's what I do. I would, and then of course you could read my book. So you want to learn. Now, the one thing about mining stocks, I've found that it takes about 2 years to learn how to do it. So most people, not have been doing this for a while. But it takes some time to get an understanding. There's just so many data points, different various things that you have to look for. The one tip that I would give people, and these are people that are probably already involved in it, is I would be really leery of chasing drill results. I'm on the other side of the coin on this than a lot of people, because a lot of people really like exploration stocks. But I personally have learned that exploration stocks just they don't have a good risk reward. Because you generally, when you go after an exploration stock, you're investing in a company that doesn't have a lot of value. And the reason why it doesn't have a lot of value is because they haven't found anything yet. You're betting that they are going to find something. But it's really difficult to find an economic mine. So what I recommend is you chase what I call cash flow. And that's when you find a company that already has what I call the goods. So you go and you look for companies that have the goods. They've already found a mine. They're either building it or they're producing it. That's how you kind of lower your risk, if you will. But I like to do everything. I do own some exploration stocks, but I lower my investment because the risk is higher. But I don't own a whole lot of exploration stocks, but I will delve into some of them. Sometimes the drill results are kind of very, very stunning, very strong. So you go ahead and take the chance, but you definitely are taking the chance that it's going to turn into something economic. But chasing drill results is very, very risky, and a lot of people like trends. They like to doing that because it's a quick return. Producing companies or exploration or development companies, a lot of those are long-term investments. You have to wait. I mean, it can take 3, 5, 7 years to build a mine. But that's what I like to focus on. I like to go after the cash flow.
Yeah. So
you buy gold in the ground or silver in the ground cheaply, and then you wait for that to get revalued, and then that company turns into a growth company. So they buy another company or they find another mine, and that's when you make your money. I always say you make your money on the second mine, not the first mine.
Right. That makes a lot of sense to me. Rather than chasing and hoping. You're looking at many things, but you're looking at the cash flow. I'm looking at Mining 101 on Gold Stock Data right now. It's all right there. Several videos, and then followed by a very detailed explanation and formulas here. It's really impressive. So people should check that out, as well as your book and the whole website, which is available right now. Now, again, we're not calling tops here. We're not giving advice, but I like to ask people this. What do you think is going to come first in the equities markets? Dow 40,000 or Dow 10,000?
Well, it all depends on if we get inflation or deflation. We don't know. It depends on what the central banks decide to do, is how much money they're going to print. But I will say this: we're not going to get to 40,000 on real growth. Now, that's my belief. If we do get to 40,000 on real growth, gold's going to under 1,000. The whole premise of gold is what I call a fear trade. It's a hedge trade. So the only people that really get real excited, that really move the gold market, are people that are buying gold as hedging, and they're chasing the fear trade. And so that's really what I'm expecting. So the 10,000, 40,000, again, we don't know. We don't know if we're going to get inflation or deflation. Now, I personally think we're probably going to get deflation, but it's just a guess, because I think that the gold-silver ratio is probably going to go, or the Dow gold ratio is going to go all the way down to 2 to 1. I forget what it's at right now, 10 to 1. Let's see, we got 1,200, 20,000. So it's not quite, it's more than 10 to 1 right now. So that's quite a shrinkage. So if we go down from 22,000 all the way to 5,000, that's quite a crash, or to 10,000, and then gold goes up to 5,000. That's kind of my expectation, is 2 to 1. It actually went 1 to 1 in 1981, where you had 850 gold and 850 Dow, 1-to-1. So I'm expecting 2-to-1.
Interesting. Okay. And finally, I'm looking right now on your website. You've got the best and worst performers. I really like this page. It's fascinating to me. Like, for example, you've got Extract Resources PLC is up about 4,000% on the year so far. And then on the other side of things, you've got CanStar Resources, which is down 99% on the year. Would you be, and this is just a personal philosophy type of question, would you be more likely to invest in a mining stock that's down a lot or up a lot, or neither?
Definitely down a lot. The one thing about mining stocks is you really don't want to chase a stock that's taken off, because you want to get a good entry price. So the one thing you have to have is a lot of discipline in the miners. For instance, I waited, I think, 7 years before I bought Endeavor Silver and McEwen Mining. I wouldn't buy them high. I waited until I got a good entry price. And that's what you have to do with the miners. You have to be patient and wait for the cycles and buy them low and get a good entry price. Otherwise, you're not going to get a good return. Now, because there's too much risk in the mining area to be chasing these stocks. But if we do get a mania, then a lot of people will be chasing them. Of course, they will be buying the stocks that are trending higher and are taking off. And I see that a lot. I see companies that are up, 2, 3, 400%, and people are buying them, just chasing that trend. But I don't do that. I'm much more patient, because I wrote this in my book back in 2010, that my goal is a 500% return. So if I'm going to hit a 500% return, I better get a good entry price. But I do buy stocks that have 300%, what I expect 300% returns. And the reason why I buy those, they're producers, is to de-risk my portfolio. But even those stocks, I try not to buy them, if they've had a big run recently. If a company has a big run recently, then you have to wait. You have to look at its chart and say, oh, wow, that stock has just had a big run. It's not the time to buy it.
Right.
So those stocks are, and that's another reason why they're there. Like, oh gosh, these are the stocks I missed. That's the way that I look at it. I missed those. It just took off. I'm in contact with a lot of the members on my website, and some people are kind of kicking themselves because they didn't invest in Novo Resources, because I liked Novo Resources when it was under 100 million market cap, and now it jumped from 100 million to 330 million. People are kicking themselves going, why didn't I buy it then? And then they're like, I'm not going to buy it now. It's too valuable. And so it's kind of a, it's a tough call. How much higher is this company going to go? And you don't want to miss those. A lot of times you don't want to miss those stocks. I call it the FOMO stocks, fear of missing out.
Right.
Because they're trending, and it looks like they're going to continue trending. And so, so that's the tough thing about this investment sector, is you gotta get these stocks cheap, and you don't want to miss out. You want to make sure you get a position in the really good companies when they're affordable.
For sure. If you're going for the triple baggers, as you like to do, then you have to know what you're doing. You have to be patient, and you have to time your entry very well, and no chasing allowed. I tell that people all the time. So what I'm going to do now is I'm going to read Mining 101. I'm going to read it over a few times because there's a lot of information there. Might take me a while. I'm going to read over your book, How to Invest in Gold and Silver, available now on Amazon.com. People need to go to goldstockdata.com, check out the free resources, and then check out the subscription rates, which are quite affordable, I should say, very affordable, because just, if it helps you to understand the mining sector and how to value a company in precious metals and mining, it'll be worthwhile for sure. Mr. Durrett, I've learned a lot today. You've given me a lot to think about. If people want to contact you, other than going to your website, how can they do that?
Well, actually, the best way to contact me is through the website. So just go to goldstockdata.com, and there's a contact. That's the best way. One thing, I'm sure people are wondering, how much does it cost? So the membership is $149 a year, and And we don't have monthly, and there's no recurring, so you have to re-sign up each year.
Right.
And 149 it's a lot of value, and that's the one thing that we try to provide is value. And so that's kind of a goal of ours.
Sure. 3 months for $99, or better yet, 1 year for less than $150. That'll pay for itself many times over just from the education, just the knowledge. So I don't see why people wouldn't want to sign up for that. Mr. Durrett, you are also, I'm going to tell everybody, even if you won't, that you're on Twitter, at Don Durrett, Durrett. You're also on YouTube. You have a YouTube channel, so type in Don Durrett into YouTube and you'll find that. But most importantly, go to his website, goldstockdata.com. Thank you so much. I really appreciate this, and you're welcome back anytime, sir, on Looking at the Markets.
Oh, excellent. One last thing. I actually released the Seeking Alpha article today, too. So make sure to go to Seeking Alpha and check out my article. The article today was how to create your own GDX portfolio. And I gave 3 groups of stocks to include in your portfolio.
Well, I want to know what they are right now, so I'm going to check that out. You piqued my curiosity. Okay. Mr. Durrett, thank you so much for your wisdom and insight today. I really appreciate it today.
Thanks for having me on, David.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.